So within the next 2 years, we have more mortgages coming due, up for mortgage renewal than we've ever seen before in Canadian history. What do these numbers look like, Joe?
So for 2024, just this year, we're talking 250 billion, like billion with a B. It's a lot of money.
And
coming up for renewal.
2025?
Will it be even more?
So we're talking over $500 billion with a T
Yeah.
in the next 2 years
Yeah.
coming due. Why is that? Why are we seeing so many mortgages come due?
Kind of two things, I guess. The first is a lot of people bought houses.
Mm-hmm.
You know, interest rates were at historical low levels. A lot of people during COVID were looking at moving, doing something different, finding different space. So we had tons of transactions happening. But then we also had a lot of people maybe breaking their mortgage, refinancing, early renewing because interest rates were at record lows. So they were trying to capitalize on that really low interest rate market.
Absolutely. But now we're certainly in a different environment than we are today. I think they were called artificial interest rates at the time,
sure, yeah.
sub 2%, and now we're around the mid 4s for 5-year money, like that same money today. So what kind of strategies are we recommending to our clients here today?
Yeah, so the first thing is there's a lot of fear. You know, you're coming out of this really low rate environment. The news probably hasn't done any favors for the general public in saying, you know, your mortgage payment's going to go up 800% or whatever it is. So the reality is you need to have a conversation early, figure out what does this really mean. Often when we actually run the numbers, it's not as scary as people think. So it's a great time to kind of look at your whole financial situation. You know, the good news is a lot of properties have equity that has grown and increased. So you can look at refinancing if you have any consumer debt or other expenses. Also, sometimes we're just looking at people to push out amortizations to make sure the cash flow is working well for them so they can be comfortable in this higher rate environment.
Yeah, I'd like to explain a little bit more about what that means, because
Yeah.
I've had that conversation with quite a few people.
Sure.
You know, if you had 20 years left in your mortgage and because of the new rates, maybe that payment does go up $400, $500, $600. We can look to move that amortization up to 25 years. You know, I know it's going backwards a little bit, but at the same token, it's staying in your home. It's keeping things comfortable. And if you have additional cash, you can always pay that mortgage off faster. But it's just a method to keep that month to month manageable, keep people comfortable, keep them in their homes. And again, if these houses have gone up in value, that's a win. So there's options, right? That's what we're saying is number one, get ahead of it. If you've got a mortgage renewal coming due and you're worried about what interest rates have done, call your broker. Always the broker. Call your broker, call a broker, have a conversation, figure out what options are out there, and we'll always do our best to help, again, keep you in the home, keep payments comfortable, and give you all of your options.
Yeah, that's a good point. We want you to call broker, but maybe just one other thing. What timeline should someone look at doing this?
I personally, I like to see it about 6 months before renewal. Right. You know, 120 days is what people say to hold the interest rate, but there's a lot of things we can do. And it's 6 months before you can really start to strategize, put a plan in place, maybe secure rates sooner, maybe pay that mortgage out a little early, but at the very least you can get the conversation started, get a plan, get the documents going. If there's any corrections that need to be made to credit, it might give you enough time to do so. I think 6 months. You agree?
I agree.
Okay.
Anyway, renewals, it doesn't have to be that scary. Thanks so much.